All right, so here's a quick update. So yesterday we had a live stream on Telegram, and I was able to show you guys the possibility on GBP USD. So we were able to look into GU and also DXY. So DXY was looking bearish, and I also said that we were actually having or going to have a pullback, and I actually highlighted some reasons why the pullback was going to happen. As you can see, we had a ranging formation right here, which actually happened last week. And this is a new pullback, which is for this week. The market actually started with a pullback on Sunday, and this is what we have. So if I head back to GBP USD, as you can see, we are also having a pullback. So basically, DXY is making a pullback to the upside, creating a bearish pullback. And GU is actually creating a bullish pullback. So what that means is that because DXY is for dollar index, which is the measure of the strength for dollar. Now, if dollar is actually weak, then pairs like USD JPY, GBP, USD JPY, USD CAD, USD CHF will also be weak, right? Because USD is on the base currency. But in the case of GBP USD, GBP USD, the USD there is on the quote currency, so it's going to be moving in opposite direction. So in this case now, GBP USD is going to be strong. So right now, as you can see, GU is currently strong because why? Dollar is weak, right? But at the moment, the phase, there is something called phase of the market, which is something that I usually highlight for you guys. And this is the current phase of the market, which is a bullish continuation formation, which is what is going on right now. And if I head back to 1 hour time frame, so we can highlight what is going on the pullback. And at the same time, we discussed the formation that is going on right here. I mean, we all recognize this formation, right? We recognize that this is a double top formation, and this is the break of the structure. So I was, in order to stay in line with the trend, so I was like, we all should be patient with the market to see the possibility of what is likely going to happen in this formation. But as you can see now, price actually broke below. And at the same time, I also said that, if we were going to place a sell from here, I mean, I would actually advise traders to use half of their percentage. The reason is because, so for example, if you were to be trading with a 1% risk, I mean, we all should have a reasonable risk size for all our position. So what I'm trying to say is that if you were to be using 1% of your account, it means that anytime you want to place a trade and you have found a setup that is very, very good and is giving you high potential opportunity, then you can use your normal risk, right? So for example, if I am trading this pair, I actually took a buy on this pair last week. I took a buy from here and I used my normal uh, risk, which is 1% risk, right? So I placed a buy from here. My stop loss was below here. So this was a very good risk to reward because I actually got about, I think this was a 1:2, 1:3. Actually 1:3 because it was 50 pips, 50 something pips stop loss. As you can see, this is about 55 pips. And I actually got about 1:3 because it was actually 160 pips, as you can see right here. 160 pips. So this is actually more than 1:3. So as you can see, so this was actually very, very amazing, right? The risk to reward was very, very good. But this right here, I could use my normal risk to reward because I was actually trading in line with the trend. Because if you look at it here, you will see that price is actually moving to the upside. So it was actually very, very important for me to maintain my risk to reward. But in this case now, if I am trading against the trend, I won't use my normal risk. I will be using 0.5, which is half of 1%. And the reason is because I'm actually trading against the trend. Now, imagine if you were to be trading, let's assume you took a sell from here and you're expecting price to go further. And probably your take profit was around this. I mean, just for example, so let's assume your take profit was below here. Now, what is the guarantee that price will get to this level, right? Because this is actually probability. So what is the guarantee that price will get to this level? So we are not sure, but once you recognize that the setup you're trying to trade is actually a counter trend, so which means that you are trading a pullback, then you always have to be careful. So I found this initially the way I trade a double top formation. I usually wait for a confirmation, so I won't enter the break of the structure immediately. And I found an entry which is around this this consolidation that happened here, which was like just second. If I take you back to 15 minutes so we can see the formation that happened, as you can see, this is what happened. Now, here we had a double top, right? This is top one and this is top two, right? So you can see our price consolidated around the support zone. This pullback confirms that there is going to be a continuation move because this is the first impulse and this is the correction. And usually already created a three wave, right? A three wave. Sometimes the waves might not really look perfect, but you know, the market is not even perfect, right? So there are some formations that you might need to just use your ideology on that, right? Because you can see here we have the wave one, the wave two, and wave three. Usually, if you are looking at this formation on probably 1 hour or 30 minutes, you might not really see clearly. But moving down to 15 minutes, you can see the activities. So in this case, I was able to use my entry below the structure and my stop loss are both here, and as you can see price actually went further to the downside. Actually this was a very good opportunity. I mean, being a counter trend, right? Actually I don't really trade against the trend, but when opportunities like this come, I mean, this is actually what's worth it, right? And as you can see price is actually making the so let's go back to the 1 hour. So right here, as you can see, we have the wave one, the wave two, and wave three to the downside. And this is the wave four. Now, this wave four might actually continue extending the leg to the upside. And this is going to be the resumption of the next impulsive move. But at the same time, we might actually still see price going further to the downside because why? The correction is still active. And you know, the most important thing for every trader is to recognize a correction, right? Once you recognize a correction and you also understand what goes inside of a correction or what happens inside of a correction, then you are going to be one step ahead of the market. So you'll be able to know what to do, right? I mean, this is the very important aspect of trading, right? Once you understand the formation, understand the structure, understand the direction, you can see all these things are going to help us in trading. Now, if I go to the 4 hours, you see that here we have the current phase, which is what I said, which is the pullback phase. And as you can see, initially we also had a pullback phase right here. Now, as you can see, our price rejected from this structure, this support structure. So previous resistance currently is now a support. So we can't really judge because price can still go further. But you can see our 4 hours candle, which is this was yesterday candle, and the daily time frame, we also have price rejecting. As you can see, today's candle is basically rejecting the structure. But today is not over because before the end of today, we are going to see what will happen. So usually in this case, we just want to be very careful. And based on the fact that price is making a bearish pullback, because if I go down to the 1 hour, okay, 30-minute time frame, you can see that this is a bearish pullback. This right here is a downtrend, right? I'm sure you guys recognize this. This is bearish impulse, bearish correction, bearish impulse, and bearish correction. So sooner we might actually have a bearish impulse. I mean, this is the probability aspect of what is likely going to happen. And right here we have the wave one, wave two, and wave three. Price might actually head back to the downside. But we also need to understand that price was rejecting this support structure. So it means that, I mean, if I have a break of this support structure, which is the major, you can see right here, if I have a break of this support structure, this might actually lead price to approach this support level. So let me go back to the 1 hour. So right here, as you can see, this is a very strong support structure. which price might actually add to, as you can see. So this is going to be the wave 1, wave 2, wave 3, and wave 4. Then price might likely going to make a wave 5 to the downside. I mean, the correction is still active. Everything right here is still a correction as long as the support structure hasn't been taken out, right? Because this is the previous higher low structure. And as you can see, the resistance structure was broken. So it is actually very, very important. So I hope this was very, very clear. And if you guys have any question, feel free to reach out to us. You can join our Telegram channel, join our Facebook platform, and you can reach out to us at any time. So thank you. And if you love this video, feel free to subscribe and turn on the notification bell. And I'll see you on our next video. Stay safe, guys.